right, guys, how does the current tightness in capital markets impacting what you're seeing?
Cost of capital has gone up markedly, not just from rates, but also spreads. And access to capital is a lot more tight as well. This affects access. It affects the ability of companies to price their products, their lending products, sufficiently and efficiently. And so to the end user, where we're thinking about trying to make something more affordable, more accessible, it really slows down the pace of innovation.
Is there a certain area of lending that's being impacted the most right now, whether it be businesses or consumers?
For sure. Look, I think the whole market is seeing impacts from credit tightening, but with rising funding costs, product design and how you monetize that product is definitely in focus. When you think about, businesses needing unit economics to work on a standalone basis, products on the consumer side like split pay within BNPL just don't work in this funding environment, anymore. So people are going longer term, obviously repricing their products to be able to monetize them on a standalone basis.
That makes sense. What are the characteristics of companies still with this tightening that are doing a good job of innovating regardless?
I think it starts with building resiliency and flexibility into business models. One of my favorite sayings, having been around lenders for the better part of 3 decades, is it's easy to give money away. In a time of tightening capital markets, when your access to funding is restricted and your access to capital is more restricted, you can't give as much money away if you're not making it profitable. So folks who are building in profitable unit economics, rather than experimenting quickly in a way to scale quickly without making money, that's a characteristic. I also think that platforms who are building in resiliency, so different areas and levels of funding into their growth models, are going to be well served in this type of environment.
Yeah, and on similar lines, I think businesses that are able to monetize multiple sides of the network and not just the lending side are the ones that are better positioned, right? So when you think about the ability to drive revenue from other sources besides financing income, right, is becoming increasingly important for a lot of our clients.
Fast forward 5 years, we're back at Fintech Nexus. What's going to have defined capital markets in that time frame?
I think it's a lot of what Dave just talked about, those that built a resilient model. I think the ones that are going to be here, the ones that are able to have a diversified funding model that can tap into multiple channels, that have multiple products, right? I think the days of kind of the one-trick pony, one market, one approach is just not durable enough to last across the cycle.
I think I agree with that on the product side, and I think that some of what we've seen over the past 12 to 18 months around the question of balance sheet versus no balance sheet, I think we'll see 5 years from now more larger scale platforms who have both a balance sheet and an originate to distribute model.
Got it. Well, thank you guys. I appreciate the Barclays team taking time to talk to us.
Thank you very much.
Yeah.